Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast. CMQ investors, welcome to the show. It's great to have you here. In this episode, I'm going to really just lay down what I think about Bitcoin as an investment. This was actually originally recorded as an Instagram live session, so please bear in mind that I used a portable microphone. The quality is a little bit different than what you're used to. If for any reason you find this to be unbearable, just let me know and I'll make sure, we don't put these episodes up if we're not recording in our podcast studio. I'm excited for you to hear this episode. Thank you as always for supporting. Please make sure if you haven't already to follow the podcast on Apple Podcasts, Spotify, leave a review, leave a 5-star rating, tell a friend, all that good stuff. With all that said, let's get to it. The real psychiatrist says, I'm surprised you have Bitcoin. Yeah, a lot of people are, but when I bought it, I was really dumb. It worked out really well for me, but I didn't deserve it. And so like I said, it's 1% of my portfolio, which, I should just get rid of it. I mean, it's just not, it's a scam. Let me be clear, Bitcoin itself is cool. Digital currencies are the future. Blockchain is awesome. I'm talking about Bitcoin as a investment. I've just had enough of all the bots on YouTube and all the people that are pumping it. It's just, there's no, I'll tell you guys my logic, by the way. And feel free to disagree. Just have an open mind with my thoughts here. So if I had a great, let's say I found an investment opportunity that it's like a sure thing. I'm going to get an incredible return. I'm the one that found out about it. I'm like, nothing's 100%, but I'm like, I've got something here. And I load up on it. I'm not going to go on a press tour. I'm not going to go tell you about it, right? Because why wouldn't I want to buy more for me if it truly is the investment opportunity of a lifetime? Think about that. Think about this in let's say, a scenario with a business. Let's say we're all in business together and we have some sort of like trade secret. And we're thinking about, our customers love it. We're getting, our margins are better than they've ever been before. I'm not going to go tell my competitors about what I'm doing. Right? Because I want to milk it. You know what I mean? I want to ride it till the wheels fall off. That's the rational thing to do. So this idea that it's the investment opportunity of a lifetime, but then all these people have to market it to us, that means that we're getting played. What bothers me, guys, is I don't assume, it's not about like people not being smart or anything like that. My thoughts, and I wrote this down to see, it's from the podcast notes. I said, someone was like, you clearly have a bias. And I said, I have a bias against people losing money unnecessarily. And I think there's also something about, think about this too. Charlie Munger always talks about how the world really works. This idea that you can just get a ton of, a great return for really doing no work, having no original insight. You just have to buy and then buy the dip. The idea that could be, that, oh great, we all get to get rich. Or make a lot of money really quickly and easily, with very little risk. That's not how the world works, right? Because, and let me be clear, I'm not just saying that because it sounds good. Let's think about that with the models. Like, why does that not work? Because competition. There's only so many great opportunities. So how would it work where we all get to go and take advantage? I mean, and the really great opportunities, the competition, not only is there so much competition, but it's better competition. It's even harder. Not everybody gets to, just become wealthy, in the course of a year because they bought what everyone else was saying to buy, right? It just doesn't make sense. Fundamentally, it does not make sense, and no one's saying that. And as I said, I'm not against it. I've made money on it. But come on, I think there's something that I've realized is I was trying to analyze it with all these models and, just be really thoughtful about it. I've been reading all these books about the bubbles, and not because I'm trying to prove a point about Bitcoin, but, with that being said, I think it's less about, it's almost like getting overly intellectualized. It's just street smarts, right? Like if you didn't know me and we're walking down the street and I say, hey, I got something I want to tell you about. You don't know me from a can of paint. And I'm like, hey, I've got this thing. There's a finite amount. And if you buy, it's going to be the investment opportunity of a lifetime. Don't ask any questions. Just believe me. Trust me. You would turn around and run away, right? Like you'd be like, this guy's trying to, play me. But yet these Bitcoin people, I'm talking about the pumpers, they're doing it all the time, right? Like these I was watching this guy Pomp. This guy's a scam artist. I'm not exaggerating. Like I watched like everything I could find, and I knew who he was. I follow him on Twitter. I like to get conflicting information, but I know guys who I've been in rooms with guys like that. Like he's a scumbag, and I say that I don't know him personally. I'm just talking to you guys, but he would be asked these questions, and he would just throw out a bunch of random stuff. Like he just diverts, and he brings up well, if you look at the central reserve and the fiat currencies and and the hash rate, it's like you're just talking in jargon, my man. That's not actually, you're not answering any of these questions. I watched him in a debate with a guy named Mike Green, and then I also watched him on the Barstool Sports podcast. And I was just like, I started shaking my head. I'm like, this is a scam. Because no one can answer these questions. And that's the thing. I'm not asking questions to stump anybody. These are reasonable questions, and questions that we all should be asking before you invest your hard-earned money in anything. And that's what I'm saying with this. I'm going to just get rid of my Bitcoin. It's a scam. There are people the whales are going to do great, but eventually when they take their profits, it's over. I don't mean, and again, just so everyone who's just joining now, this is not about, I think cryptocurrency is awesome. Digital currencies are definitely going to be the future. Blockchain is awesome. I'm talking about Bitcoin as an investment, this BS narrative that this is the investment opportunity of a lifetime. If it was, why are there all these bots on YouTube? I can't go through YouTube comments without it saying, now's the time to buy crypto because it's going to go up. It's like, you don't have to do that if it's really the best investment ever. And you wouldn't go tell everybody about it because you wouldn't need to, right? Like it's just, when Warren Buffett and Charlie Munger bought Apple, they didn't put out a press release. You know what I mean? Because it would mess up their entry price. Everyone would copy them. But the Bitcoin people, they want everyone to copy them because that's the only way the price goes up. And the other thing, and this is, I thought, really interesting. I've been reading about, stuff from the 90s and the 80s. And if you listen to the podcast, I've done a few episodes about the dot-com crash. And it's even unrelated to Bitcoin, just it's improved my ability to see this for what it is. Back then, you have big institutions buying in. You would have, major, you'd have the media talking about it. You'd have these like celebrities endorsing it. So that's not surprising that that's happening now, and it doesn't mean that they're right. And I think that's something that as someone who's, like a fresh perspective, an outsider looking in and just trying to, educate myself as best I can, just like we all are. I might be a little more psycho about it, but, one thing I've realized is like I had this notion that everyone, behind anyone who was like at a major institution, like they were Albert Einstein. And I'm not saying anything negative. I have a lot of friends who work for the big institutions, but these are people like us, and they're affected by the incentives just like we are. Just because a major bank says they're going to invest in some Bitcoin, that doesn't mean they also invested in the dot-com stocks. Companies that didn't have business models, right? Because it was the thing to do. I mean, we have this human tendency to herd, but that's where I feel like I'm over-intellectualizing it. The bottom line is it's a scam. How is it not a scam? As an investment, why does everyone say, you need to get in on this? Why would you be telling me that? Why wouldn't you just go buy more for yourself if it's so inevitable, right? It makes no sense. It makes zero sense. No one can answer that question. And this whole buy the dip. Yeah, buy the dip until you get ripped. You know what I mean? Like it's not. And I see people in our like CMQ investor group chat and people, again, sometimes I make content. I feel like I'm trying to talk to like me 10 years ago. Because I would have been all about this. I would have been I would have been one of the bots. Not actually, but just, I think when you look at like this crypto stuff, or not Bitcoin, let me stick to Bitcoin. It's awesome technology. It's super cool. But as an investment, the only way that it goes up is if people think they can sell it to someone else for more. There's nothing in it that makes it worth anything. And as I'm reading more and more about history, this movie's, I shouldn't say I've seen this movie before, but this is a sequel. It's more, what's after a trilogy? It's like Rocky 8. Since 1623, like this has happened periodically, throughout every century in different ways. And it hasn't just been the stock market. There's been worthless currencies before. Everyone wants to bring up tulip mania, but people are like, well, it's not flowers. Anyway, I could get pretty hyped, but I think that guy Pomp is a scam artist. I really do. I watch these videos, and I'm telling you, you guys know I have an open mind. I try to prove myself wrong. And it's like it's all the psychology tactics, and I happen to be really well versed on it, so I can read between the lines. But he doesn't answer any of the questions. If you ask me about like why do I own Apple, I don't have any trouble answering that question for you, right? Because I could tell you why, and there's nothing to hide, right? But with the Bitcoin stuff, it's just diversion tactics. And anyway, that's just my thoughts. And I just don't like seeing people be set up to lose money, because it's very there's a lot of persuasive people, and there's a lot of psychological forces at play that can cause us to make bad decisions. And you guys know, like, one of my obsessions with us, the podcast, with CMQ investing, with Charlie Munger quotes, it's it's realizing that, look, as an individual investor, I just the best chance I have is just to make less mistakes than the average investor. If I can make fewer mistakes and avoid those mistakes, and a lot of those mistakes have already been figured out, well, that's going to give me the best chance to get the best rate of return. And if I, stick to my long-term strategy, if I compound money quietly, over the course of my lifetime, that's the best way to build wealth. I can't find a better way, and I go off evidence. There's not an argument that I can find that beats it, or evidence for that matter. And again, I'm not trying to prove anyone one way or the other, but there's been Bitcoins before, and when everyone's saying that it's the best investment in the whole world, it's not, right? People wouldn't be talking about it, because that's not how things work. It's only because there's some huge incentives to get people to believe that it somehow has intrinsic value when it doesn't. It could be a currency. I'm not saying they won't be a currency. I'm just saying as an investment. And then what else happens? I was reading about the 90s .com stuff, and they were talking about how, like, these funny metrics started. People talking about like eyeballs on site, and these things that had nothing to do with anything, but they were just interesting. And it's, if you're not in the space, it's like, ooh, like, engagement, that kind of stuff that we hear now all the time. Well, when I was listening to these Bitcoin pumpers talk, they're always like the hash rate and the number of institutions, the number of people. It's all like social proof, and it's just throwing metrics around and jargon around that they're able to throw out, because it's like hearing someone speak a different language. You almost want to be polite and not be like, what are you talking about? And you don't want to sound stupid. This is our nature, right? It's like it's our social beings. But it's in my line of work, I always say when I do like my guest lectures and stuff, a good metric is not, there's vanity metrics and there's success metrics. A vanity metric is usually just like a number. So if I'm like, let's say, I help some app like blow up, and it's like, we got 1 million downloads in 2 months. That doesn't mean anything, because for all I could have done something just to get like really cheap downloads, just to pump the numbers. What matters is like something, like our rate of monthly active users is growing by 15% month over month as our user base is growing at this rate. Like, it's a ratio. It actually tells you something that makes you change your behavior. When you hear people say things like, there's like, if you look at the hash rate, or the number of institutions, or the number of people, so we're saying that because the crowd is adopting it, that now it has a lot more value. It doesn't make sense, and I don't fault any of us for not getting it, because there's so many psychological forces at play here. There's FOMO, social proof, authority bias, mere exposure effect, consistency bias. I was coming up with this thing. I'll share this with you quickly. I feel like I'm just talking really fast, but I'm obviously in the mood to talk about this stuff, because it's just super interesting, and it's important that we avoid this nonsense. Speaking of nonsense, one of my dogs he also doesn't like Bitcoin. I was thinking, like, why is it so hard to convince somebody that, Bitcoin, if you're buying Bitcoin, like, you're being hustled? Like, why can't I convince really smart people that, like, this is a bad idea? And I was looking at, Darwin would talk about, he would always try to, as soon as he would find any sort of disconfirming evidence, he would write it down, because our brain, he understood, I think innately, like, our brain has this tendency to kind of be like, yeah, whatever, back to what I believe. And then there's, in psychology, of course, confirmation bias, which, that's a definition here. I could just tell you what it is, but, it's where you're finding evidence that agrees with what you believe to be true. It confirms your already existing explanation or belief. Then I thought about what are some other areas where, like, we're slow to change. And there's an idea, neuroplasticity. Like, as you get older, in some cases your brain is less It's less, not resilient, but it's less likely, it's harder to learn new things in some cases. So, there's things you can do to, improve the plasticity of your brain. But again, that's the nature of things. Like we kind of get rigid. The same thing with Charlie Munger talks about the sperm and the egg. It's weird talking about that, by the way. I feel a little weird talking about this, but when you have once the one sperm gets in, no other sperm can get in. And Charlie Munger uses that analogy about how our mind, once it gets one idea, it kind of shuts off, like no other ideas can get in. And then I haven't written this one down, but then thinking about like anatomy and just our bodies, as you get older, you get less flexible. There's just all these examples. Someone's like, hey buddy, come here. Come here, Tango. Sorry, I've got speaking of plasticity. Tango, come here, buddy. Tango. Hey, come here. Say hello. Sorry, guys. Hang tight. Ugh. It's perfect. He's all in on Bitcoin. He's like, it's the investment opportunity of a lifetime. I saw it on Twitter. He bought the dip. Anyway, those are some thoughts. Like it's just really hard to see. I think one of the things with Charlie Munger that I was talking to someone here at the office about was, a big part of what I think I've taken from his, just everything I've consumed is it's about trying to see reality as it is. It's about seeing the world as it is and dealing with reality as it is. And it's really hard to do. Our brains are very limited, and I say that for everyone because we know that it's a fact. We wouldn't be talking about cognitive biases. So it does take a lot of discipline to help train your brain to see reality. And I'm not claiming that I have the perfect perspective. I'm always working at it, but that's when you listen to Charlie Munger talk. The reason it cuts through like that is because he's done the work, and it's a lifelong thing. But I think as investors, I'm positive that as investors, it's one of the most important muscles to build. And so knowing the big ideas from all the big disciplines, it allows you to rule out a lot of things that just don't make sense. So I'm saying with the Bitcoin situation, my understanding of psychology helps me see that there's a lot of psychological tendencies at play here that can cause us to act irrational and not perceive things correctly. When I'm watching this guy, this scumbag, try to sell people on Bitcoin on YouTube, and he's not answering the questions, but he's very persuasive and he's very confident. I know why that works. I have models in my head as to, okay, I see how it's effective. When we're talking about, just the nature of biology, competition, the world doesn't work where everyone, there's this opportunity that everyone gets to, let's say there's some resource for food, not all the animals get to go and take advantage. Some, only the most, I guess, the most adaptive, the most, the strongest, the best, the ones that have the competitive advantages are going to capture those opportunities. But in this Bitcoin fantasy land, we all get to, become super wealthy really easily without having to do any work or have any insights. So how would that make sense? Where we all, that's the narrative that's being pushed. And you have to ask yourself, going back to episode 1 of the podcast, what's the incentive at play? Who stands to benefit from this? For the people that are most vocal, who have the biggest followings, how are they incentivized to push this narrative? What happens to them if people stop believing in this stuff? Because at the end of the day, if let's say the market stops believing in Apple, ultimately the earnings are gonna take over it. The voting machine will become a weighing machine, and that's how it works. And we can understand that using logic and just facts. No one can really tell me why Bitcoin is worth anything. I'm talking as an investment, and that's just the facts. And let's face it, guys, it's bullshit. I'm just coming to this conclusion, as someone that's owned it. Let me see what you guys are saying. I'm curious if you guys are just freaking out over this. Okay. Sozo says, great analogy. Thanks, man. Middle.course says, hi all CMQ gang. Good day, people. What's up, Middle Course? James Reed says, how can I join the CMQ group chat? Hit me up offline. We can talk about that. Middle Course says, how do you consist on margin of safety? What if the price does not reach our margin of safety line and it goes up and then we're going to miss out in it? Well, I think it depends. It's opportunity cost and it's about your risk tolerance. But I think, you should have a margin of safety. Don't fall in love with these stocks, or anything for that matter. It doesn't love you back. Do what's going to get the best return over the long period of time, and try to buy stuff that you're not going to have to sell. And that's why I'm saying passive indexing is such a smart move. What's up, Frank? I see Frank Trofo. It's good to see you, man. Helder says they say crypto is a hedge, but why does it crash every time the stock market crashes? Exactly. Well, because they have to come up with some reason for people to just, like that's part of the reason I have 1% of my portfolio in it. It's because I was like, yeah, it's a hedge. But again, I'm not like, I just watched this guy, Mike Green, say something. He's like, it's a lost 1%. And it was just so refreshing to hear that, because I don't think I know everything about everything. I'm always learning, as you guys know. And but again, going back to like, forget the books, forget the models. Let's street smarts. If somebody came up to you and said, hey, just give me a little money here and I'll be able to get possibly a 20x return for you, like relatively soon, very little risk. It's a sure thing. And you don't have to do anything. Like, I'm just telling you about it. Come on, it's a hustle. Like, that's what just hit me. It was like, I've been overthinking this. Forget let's not get too intellectual. Let's not Clint Eastwood, I guess I don't know what I'm not trying to, I know he's like a politically polarizing person, but I'm talking about him as like a director. I once heard that he says on sets, he's like, let's not F this up by thinking too much. And I feel like that's what's happening with what I was doing with this podcast earlier was, I had like my stack of books about the crashes of the past. I had all my notes on psychology. I even looked up papers on delusions, because it is a delusion. It's an idea, it's a firmly held belief that doesn't agree with reality. And that's actually like the medical definition. But it's like, wait a minute, let's just zoom out for a second. It's a hustle. Like, people are getting played. Oh no, you gotta buy. Look, I'll show you. I have TweetDeck. I don't know if this will come across because it's like on a big screen. But I have a filter where like anybody who's tweeting about Bitcoin or buy the dip, I filter it by like it has to have a few retweets, and so you kind of find the influencers and just see like what their narrative is. And again, it's just whether they believe it or they don't. It's like it's a delusional fantasy, and that's not being mean. In that book about the 1929 crash, they refer to like these certain periods like as people were in fantasy land. When it's not. It sounds mean. I'm not trying to pick on people. It's just, let's call it what it is. Like, it's divorced from reality. Okay, so like one guy says, and it's going to be weird if I turn on my screen. It says, Bitcoin gives the world a standard monetary measurement without the need to trust a standard setting authority. Like, okay, like again, it sounds great, right? It sounds really great, but it doesn't. What does that mean? Like, and why do I want? I don't know. I don't want to get like too deep into this because I could get really hyped up, but. And then here's a good example. Bitcoin Magazine. Football legend Tom Brady said he would love to get paid in Bitcoin. Like, I love Tom Brady, but like, he's just getting paid. And I'm sure they're paying him a fortune. But if this thing is a sure thing, why do they need Tom Brady to endorse it? Right? If it's the investment opportunity of a lifetime, why do you need promoters? Right? Like, that doesn't make any sense. We have to think like, it's street smarts, guys. Street smarts. I think that's going to be a segment of the podcast, like street smarts. Let's stop being intellectual for a second, because that's actually, I think, in this case, just imagine a time where someone promised you something that was too good to be true. And, it happens. If you live long enough, it's going to happen. You're going to get kind of like duped at some point. But this is one big, this is a effing scam. And I'm telling you, watching this guy pump, that guy is not just a charlatan, he's a sleazeball. Again, I don't know him personally. I'm talking about his like persona. He's... Okay, so on that note, during this Instagram live session, for some reason, my sound was completely cut out and no one could hear me. So I had to restart everything. This might sound like an abrupt transition, but now you know why. Let's get back to it. Okay, guys, I don't know what happened. It said we had some sound difficulties. That was a bummer. We were on a roll, and I wanted to read all your questions. I'm sorry I didn't get to see them. So I was watching this video, and he's asking him questions, and he keeps being like, "Hey, you know about MicroStrategy? Hey, Mark Cuban? Did you know that, like, it just bringing up all these," and again, this is psychological stuff. So he's bringing up, first of all, he's diverting by bringing up like authorities and, talking about social proof. And, if you look at all the individuals who are in it, everyone's leaning into this space, blah, 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 blah. He's not answering the question. Like, if someone won't give you a direct answer and they're basically trying to sell you something, like, it's not in your interest, right? Like, think about that. Think if you're trying to buy something that, anything. And you're like, hey, so, now, why is this valuable? And they're like, hey, you know that guy who lives down the street from me? He bought it, right? Yeah. So anyway, if you look at it, and they start saying a bunch of words you don't understand because it's like their jargon, they're trying to throw you off. When you can bombard people with information like that. Anyway, I see like in between the lines. I don't know I've never really dug into his videos before, but I was like, this is just gross. And then I looked at how people responded to that one post, and the emotional reactions was like, oh my, like I have to depend on these folks to hold on in order for this to, like, everyone has to believe in it. It's crazy. But anyway, I could talk Bitcoin all day. Anyway, I'm selling it all today. I'm done. I'm tapped out. But yeah, just be careful. You know, that's my big thing. I'm not trying to convince anybody. I think that they're, you know, I think I just don't like seeing people get suckered. And I think that that's what I observed. Because I remember, 10 years ago, when I was in my early 20s, I'm not saying I was, I'm sure I would have been a lot more bullish on this stuff because just because I was younger, you know what I mean? Like it's not fooling anyone they're not really marketing to, I don't want to get into specifics because I don't want to make statements that aren't like 100%, but it reeks of a scam. And I just like snapped out of it and see it. Because I just thought like street smarts, if someone offered you this like on the street and it wasn't called Bitcoin, you'd say like, all right, guys, let's get out of here because something's up. But anyway, the other thing I just thought I'd just talk to you about. So I've something, if those of you who've listened to the podcast, you guys know that I'm really into, looking at every major source to see, what are the mistakes we can all avoid that have already been made. Hey, what's up, Greg? And one of the ones that always comes up is like, as individual investors, we're bad at picking stocks. Like it doesn't usually work out. And I've been trying, during COVID, I definitely had some luck with the individual stocks. And I tried to apply all these ideas about, valuing the business and everything else. But it's like the more and more I realize like the ability to stick with that long term, it's a lot harder. Like psychologically, I've gone through it, but I think something for if you're a younger investor, try to avoid going for the individual names unless you really know how to evaluate a business. It's not easy. It's not something you just like get to do after studying it for like 3 months. Like I feel like we're now in this world. Like I was walking down the street. This is like 2 years ago in New York City, and there was like it was a cobblestone street. I guess it was in the neighborhood called Tribeca, and there's two people and they were talking because the cobblestone was all kind of messed up, and they were like, back in the day, you'd be like you were the cobblestone guy. That was like your life's work, and now somebody just watches a YouTube video. And I think it's easy to feel like because of a YouTube video that, you now can just like follow some formula. And I've made this mistake before, but, that's why I'm curious your thoughts on like, what, if you're still into like individual stocks, what makes you want to do that? If you're saying, hey, I'm doing it because it's fun and it's like, I know it's risky, but I enjoy it. Like, at least I think that's fine because at least why you're doing it. But it's something as I create this content, I try to practice what I'm preaching, or at least what I'm sharing. And, so I've realized like, hey, I should probably move more over to like passive indexing. I think I mentioned I sold a lot of my gains in Chewy, and I'm just curious, like your thoughts on if, for those of you who are still like big on individual stocks, a fellow CMQ investor who I like a lot, he's like me 10 years ago kind of. And he was asking me today about like some IPO, and I don't want to be discouraging, but I'm like, man, don't even do that, or like individual stocks. And also too, if you don't have, let me put it this way, and this is not towards him, but if you're asking people like, hey, what do you think of this stock? You should be the expert on it before you start asking people. Because when we're excited about stuff, we're looking for ways to like shortcut it so we can just justify doing it. Like, cause I've been there, like I've made mistakes where I'm like, I got to get this now. If you're excited about an investment, don't buy it because you're emotional. And that's something that in all these like studies, Munger to all the legendary investors, you don't want to be in an emotional state when you're buying something. And if you're rushing to buy it because you have to get it now, you're not thinking about it the right way. The thing that's helped me the most with Charlie Munger is actually just really appreciating the long-term, like what it means to be long-term. It's not a couple of years. He mentioned he bought Berkshire. It was $16 a share, and he's given some away, but he hasn't sold any. I mean, that's not normal. And he says you have to really commit to that. Like it's one thing to be like, oh, I'm long-term, but it's hard to be long-term in individual names because you have to understand what the business is doing. And if it's, you've only read like 4 10Ks, and at least you've read 10Ks, but I'm saying this to myself too. Like thought I knew before. Like I got lucky with Apple, right? Like I bought Apple in 2014 because I was like, a lot of people are using Apple and I love it. And Warren Buffett says you should only buy it if you're going to hold it for 10 years. I mean, that was luck, right? Like I'd love to say I'm so smart, but I mean, I just got lucky. And, but it's like actually hitting that point where I realized, oh, that was luck. But realizing that, luck isn't eternal. You can have, or it doesn't go on forever. You can also be unlucky. And what's scary is you can be taking risks that you don't even realize you're taking. You can take a lot of unnecessary risk. And an example of this would be right now with the, even with passive indexing, like everyone's just like, I got to be all in on equities. And maybe, it's an individual preference, but, are you going to be able to handle that pullback? And because it'll happen, but we're long-term investors, so who cares? Because I'm not planning on the money I put in the market, I'm not going to touch for 30 years, right? That's how I look at it. So it keeps me, as long as you understand what you're investing in and you can stick to that, but that's how wealth is created. And I'm not saying that to lecture anyone, but was kind of one of my early obsessions. Like, how does this work? Like, what have these people figured out that I can figure out? And that's the big one. That's why it's called compound money quietly. That's why it's CMQ investing. That's one of the big ideas that really works. Like there's no argument against that. That's the most surefire way to accumulate wealth over your lifetime. And it makes sense. It adds up. Unlike buying Bitcoin because it's just going to keep going up, right? Like, one is a lot more exciting, but for me, I'm just trying to do, and I don't know how, I feel like we're all probably similar in this. Like, I just want to be rational. I'm not looking to have fun investing. I'm just looking to make the best choices with my money. Because, we work hard for it. Everyone works hard for their money. So why would you want to, and there's just so many people that are out here trying to make us do stupid things. And that's where I get a little frustrated. It's not like, I don't want to be an angry guy, but, in some ways, like I kind of want to be a person that if I see somebody like getting set up, I want to step in and say, hey, wait a minute. But maybe I need to get off my high horse, or as my Uncle Joe says, I need to get over myself. Anyway, let me know what you guys think. If you all are new here, I've been doing these because you like them and I enjoy doing them. It's fun to check in. But if you don't know about the podcast, I'd love for you guys to follow that. I'm not selling anything. There's nothing for sale. I'm not trying to push an ebook or have you buy my anything. It's just, this page was all started out for good reasons and it's evolved into a lot of different things. But it's, it's been fun. Let me wave back to people. Ooh, the hearts are going off. I love it. It's cool to see it's nice to know when you're saying something that resonates, because then in my head I'm like, oh, that'd be good. We should talk about that in the podcast. If you all listen to the podcast, let me know what your favorite episodes are. If you have any requests for episodes, I mean, they take time to make. They take a long time, but I definitely want to keep making things that you value. I don't want to. I'm doing this I look at this as like a community. I'm an investor like you are. I'm not, claiming to be. I'm not trying to be Kathy Wood and say I know everything, or Jim Cramer, who, I'm like a fresh set of eyes. I'm just really into figuring out how things work, and that's kind of like what I do. It's tough to sum up what I do for work, but that's a big part of it is I crack the codes. And so to me, it was like, wait a minute, I think this would be fun to invest time into. It'd be a worthwhile investment. I see more people are joining. What's going on, everybody? Sozo says, that's why I love it. Thank you, man. A.A. Lewis says, hello, sir. Hello to you, sir. All right. You say, thanks for everybody for popping in here, by the way. It's always fun. I don't have like a set time I do these. I never know who's going to show up. But okay, Johnstone Drum says, what do you think of Kramer? I think he's super talented. I think he's also he was actually pretty earnest back. There was something he called that he was wrong about, and he wrote like a very publicly facing letter being like, I was wrong. And I respect that a lot. I respect that people can acknowledge when they're wrong. I think that's a really good trait. I think, but he's in the business of getting people to watch a show, and so I don't take him at face value I should do what he says. But I would say that I can say this, and I'm like 30 episodes in, but it makes me appreciate a lot more what he does from an entertainment standpoint. It takes a lot of, there's a real talent that he has, and obviously there's an audience for it. So I saw someone said, Hiren said, I love to invest in individual stocks. Only then can I learn. Here's what I'd say back to that, and I've got it. I don't mean to keep you I have an episode about that, but just because these are topics I've also thought a lot about. It's better to learn vicariously through other people's experiences than from your own. if you can avoid making mistakes and learn from other people's, that's the best way to learn. There's no, I can tell you, and I'm saying this as a friend, not like an advisor. I've read every major academic study. I've tried to find every major investor, like legendary investor, and see what they said. And I cross-reference that with my own experiences and these books you see behind me. I really care about finding out like what's actually real, because I just want to operate in that. I want to operate in reality. And there's nothing I can find that says that as individual investors that we benefit from picking individual stocks. And I would say if you want to learn, it's a pretty expensive education, because your money, in terms of compounding, your compounding returns, it depends on the rate of return, but it's also time, and you don't want to interrupt it. So if that money could be compounding more forcefully because you're not taking a loss or you're panic selling or things like that, because that's what happens, and that's the reason why individual investors get burned trying to pick stocks. And remember that most, I guess, active fund managers fail to beat the market over the long term as well. So you're thinking that not only is it an expensive education, but it's really like overconfidence in our own abilities to like, hey, I played basketball in high school, but I think I could go beat LeBron one-on-one. Like even if I had every attribute that LeBron has, he's playing basketball every day. I'm I'm on IG Live, right? Like it's just, we have this sense like when you put it in that perspective, it's like, well, no one, of course that's a bad idea, right? And here's my response to like, it's not just to be negative or to say like, well, you don't have a chance. What I'm doing is I'm trying to be more passive and use the extra time that I'm not like sweating over a computer monitor and trying to build that muscle up about evaluating businesses, reading 10Ks, doing the things that, Warren Buffett had been doing since he was like practically, not reading 10Ks, but like since he was 11. People don't realize like with Buffett, I think like how like obsessive he had been his whole life. It's like his skill set is it's compounding returns. And I think that goes for, we're competing against professional investors. Like there is, where I'm right now, they're down the street practically. There are buildings full of people that are doing this 6 days a week for like 16 hours a day. The fact that we just like can waltz in there and pick stocks on a whim, they have a tough time beating the market. So that's helped me like steer, like just be a little more realistic with myself. And the other thing I'd say is, and not to like hammer this home too much, but I've talked a lot about overconfidence as a killer. Overconfidence is great for like me starting the podcast. It's like, hey, I think people will listen. Like if we didn't have some sort of confidence, we would never do anything. But when it comes to your money, that can cause you to take risks that you don't even realize are risky. And the idea that you're going to like buy and sell and dip in and out of positions, that's just this idea that like, something that realistically, like these people who have every technological advantage, who've been doing it for decades, you're competing against them. So I think we all need to be humble about, are we doing this full time or not? And again, all I care about is that we just get the best returns over the long haul. And everything I see, there's no evidence that supports the idea that like people like us are going to benefit long term from picking stocks. Anyway, rant over. See if anyone had any questions. I have a feeling like this is kind of like lunch lull time for everybody, so I'm just like in the background. Everyone's at work, so I'm talking to myself. So just to give you guys a couple quick updates, then I'm going to get back to I got to get back to the grind here. But so I'm going to be really leaning into the podcast in the next couple months. Like I want to give it everything I have and see where we can take it, because it's growing just really organically. And I think I think it's important. I think we're talking about things that aren't getting talked about, and if we can help those ideas spread, I think it's I don't mind the opportunity cost there for me. It's worth it. But you're going to see, like, my work ethic is my work ethic, but obviously this is a passion project. But now this is going to become in a way like work. So you're going to see. I think you'll see an animal in me. And I hope when I say that, I hope you get even more content that you enjoy and you find valuable, because I'm going to be really pushing myself to maximize this window, because I think there's an opportunity here. And I do, watching that thing today with a guy Pomp, it's like I don't want to come out and say like be adversarial, but it's like I just want to offer an alternative. Okay, so let me answer some of these questions. So any book on value investing? There's a lot. I don't even consider myself a value investor. I would just, try to read about learn the big ideas from all the big disciplines. I'd say my favorite book though on that area, and it's not quite value investing, but it's the Warren Buffett portfolio. There's a lot of Charlie Munger in that. and it's a great book. Charlie Munger recommended it at the 1999 Berkshire meeting. Just shows you I'm like an encyclopedia. I'm like, Warren Buffett recommended. It's a great book. It's probably one of the best books I've read. It helped me the most, and it really holds up, and it brings together this idea of being like a multidisciplinary thinker, and it's great. Let me know what you think of it too. I've got book notes on it that I can share. Someone says, can you put the podcast info in your bio? That's from Anthony. What's up, Anthony? It should be there. I actually just added a link tree to our bio. I'm kind of like reformulating the sort of like work in progress, but that link tree there has the links to the podcast. Let me know if you have any issues with it. But I'd love you to please follow on Spotify or Apple. Again, I'm not selling anything. It just if you want to quote unquote buy anything, just follow the podcast. I want you to hear these updates. And again, if you don't like it, just unsubscribe. I want you to enjoy it, and only do it if you enjoy it. Okay. Also, Anthony says, and maybe a list of books you think are most applicable to market trends today. Yeah, I'm working on something like that, and I appreciate everyone's patience on this. It's just it's like planning fallacy. I'd love to just turn this all around, but then I'll get off this live and I'll have like 20 emails from different clients and things like that I have to take care of. But I am putting that together, and I'm also reformulating. Like, I have a list of all the books that Charlie and Warren have recommended over the years at the Berkshire meetings. I have the Lee Lu recommendations, but I'll start doing more of like, I was thinking about maybe doing a book club. Just throwing it out there, because I think having the accountability and all like talking about these books is really helpful. Because I've seen, there's so many, you start to see how they're all related. Okay, Eli says, what's your podcast? It's called CMQ Investing or Compound Money Quietly. Just type in CMQ on Apple Podcasts or Spotify. If you like Charlie Munger quotes and the content there, it's definitely right up your alley. It's about investing, I had no expectations, but it's gotten great reviews. I've met a lot of you through it, and it's really cool because it's it's a education process for me. Like, you can't talk about something until you really know it, and I've had fun doing it. It's really hard. Like, podcasting is not a joke, but the fact that you all like it, it's the motivation, and I'm going to keep doing it. So let me know what you think, and I'd love to get your feedback. Okay, so Sozo says you're an old soul and that's why you're such a gift. Well, that's nice. Hey, like, screenshot that. I don't know when last time someone called me a gift, but I appreciate it. Okay, Brad says book club Zoom call sounds awesome. Yeah, I think we could figure something out. I might something like that. I'm just being transparent with you guys. I might need to find a way to I'm not trying to turn this into like some huge money maker, but maybe we need some barrier to entry. And I don't mean that like anyone in here would not be included, but there are some people that we probably wouldn't want. We have 57,000 people following or something like that. Like, there needs to be some way where not everybody's just like in the book club. And if that means it's like, yeah, just throwing it out there. If you have any ideas, if you have any thoughts on that, let me know. To full transparency, I think if monetization wise, if the podcast takes off and there's, huge, like the new Joe Rogan, of course, there'll be some, advertisements that I'll read because all this stuff costs money. But I'm not looking to like do something corny and be like, how can I squeeze dollars out of you guys? I just appreciate you being engaged with the content. Let me know what you like, what you don't like, because I apply that feedback, and that's what's gonna, I think, ultimately create something that snowballs. But time will tell. Okay, Respect the Mind says, any ideas on raising capital? Yeah, well, it depends what you're raising it for. So, I work with a lot of companies that are, and have worked with a lot of companies that are, VC backed, and I've been in a lot of those meetings, and I know VCs and things like that. Like, not like I'm some hotshot. I'm just trying to think about what you're asking. So, so as far as raising capital, I think, just tell me a little bit more details, and I'll answer it right here. Just I need to know, like, if for a startup, like, is it a Series A, seed series? Like, tell me a little bit more. Sozo says, Sozo is really making me feel good. You have a brain that's wired to be wise. Thank you, sir. Appreciate that. Or sorry, Sozo, I didn't mean to say, I just see like a very small picture. Thank you, Sozo. The Golden Doodle, I assume that you're a dog owner. Okay, Idol Asir says, hey, I hope you have a blessed day. Thanks, man. Same to you. All right, let's see. We got some questions in the queue. Someone says, "What's the pod?" That's from Bryant. Says, "What's the podcast name?" It's called. Just type CMQ Investing. You can check out the link in the Instagram bio. It's on Apple and Spotify. It's also everywhere else, but it's CMQ Investing, like Charlie Munger quotes. Well, look, it's getting to be. I gotta get back. It's like so. Yeah, it's like me and my dogs. They run my life, but I got to get back to the grind here. But if you have any feedback on stuff you want to hear in a podcast form, let me know. Send me a DM, however you want to reach out. But I'm also on Twitter. It's just Chris Franco on Twitter, Franco. Maybe I think I'm like hovering around 1,200 followers. Sure I'll be verified anytime soon, but anyway, yeah, just reach out. I try to get back to people. Sometimes I get flooded with messages, not like, I get flooded, but I'm not trying to delay getting back to you. It's a lot harder when there's so many people that are sending DMs. So, but I do go through them, and appreciate all you guys checking in. Check out the podcast. Let me know what you think of the new episodes. If you haven't listened to it yet, there's a lot of great content on there and I'm saying that because you tell me it's great, not because I'm tooting my own horn, but again, appreciate you all for tuning in. Thanks for and just let's keep doing rational things as investors. Respect the mind. I want to quickly answer your question. You said more on the private equity side, buying companies. I don't know that space as well. So I'm going to say it's out of my circle of competence, but hope you can appreciate the intellectual humility. Idol Seer says, please send me some books to read. I'm fresh. Yeah, send me a DM. I'll send you a link. I got to run, guys. I got to jump to a meeting. But thanks again for tuning in, and we'll talk soon. Later.